the ever-changing perception of blockchain and crypto, policymakers in the uphill battle to legitimize new blockchain applications, and are a rising number of scams causing a black eye on the industry? Coming up on Word on the Block, Caroline Malcolm, former head of Blockchain Policy Center at the OECD, joins us in an exclusive interview to dive deep into those topics and a whole lot more. Hi, everyone. Welcome to Word on the Block. I'm Editor-in-Chief Angie Lau, and I want to introduce you to someone you may or may not know, but should. Caroline Malcolm is inarguably one of the most powerful voices in the blockchain industry today, with OECD member countries looking to her and her team at the Global Blockchain Policy Center for the past couple of years for education and guidance on policy. Well, now she's left OECD as the former inaugural head of the Blockchain Policy Center, and she's on the move. She's landed right here on Forecast to share more. Caroline, it's a pleasure to see you again.
Angie, it's an absolute pleasure to be with you. Thank you very much for the invitation to join you and the Forecast team.
All right, okay, let's start with some breaking news here. What is the new role for you?
Great. So I'm very, very excited to announce that I have joined the team, the really exceptional team here at Chainalysis to lead the policy function internationally, right through from Latin Americas, through Europe, to Asia, and of course the Pacific, to really work out what's happening when it comes to policy issues in the blockchain space, and in particular in digital assets as we move into 2022.
Why are you making the move now?
Good question. Look, working at Chainalysis means really being at the forefront of the data and technology that will shape the future of the industry. I think really in the 8 years since its inception, the company has demonstrated a really strong commitment to working closely with its clients, which includes obviously leading law enforcement, tax agencies, financial crime agencies from across the world to really build the best investigative solutions that allow them to understand blockchains and what their data can tell us about the movement of digital assets. And really, I think with policy discussions heating up across the globe, being able to bring that approach to Chainalysis' contribution to policy discussions across the world. So being informed by perspectives from that diverse client base that I just mentioned, from government agencies, traditional financial institutions, through to really the cryptocurrencies, crypto companies, which are really at the cutting edge of this sector, is obviously an incredibly exciting opportunity. And of course, digital assets are booming.
Digital assets are booming. And I also, we've been chatting over the past, year, and now we kick off a new year. But it just seems that with increasing cadence, we are seeing more and more policymakers come in with, at times it really feels like the spectrum of policy response. How do you feel that you can bring to the private sector, at least at Chainalysis, all the experience that you've had at OECD and talking with governments and sovereign heads and jurisdictions worldwide to bring that same sort of gravitas to the private sector of our industry?
Yeah, it's a great question, Angie, and obviously one I thought a lot about as I made this move. Something that I really saw over my time at the OECD was a huge shift in government perspectives on the underlying technology through to its applications that really gain all the attention today. And so we really moved, when I was in that role, from sort of encouraging policymakers to think about this as an important issue to have on the radar through the process of education, understanding the technology, understanding how it was being applied, how these digital assets fit into the ecosystem, not just financial services, where obviously we see a huge amount of action today, but also in the many other permutations across a whole different range of sectors. And then finally kind of moving into the specifics of policy. And I think what this opportunity with Chainalysis really allows us to do is really deep dive into the data, into the analytics, to have a very strong understanding and to really work with our clients. And I think what's very interesting about Chainalysis in this space is that a lot of our clients obviously are government agencies. They are coming from that perspective, whether it be law enforcement, but also, as I mentioned, sort of financial crime investigations or even tax agencies. So bringing that perspective. But we're also working a lot, whether it be with traditional financial institutions who might be dipping a toe into this space, or some of the cryptocurrency exchanges, which obviously have been far more established over the last decade. And it's really that breadth of views combined with the sort of in-depth and really, I think, probably industry-leading analytics and data that we have access to, which means we really have something quite unique to offer to policy discussions.
And even talking with some of your colleagues at OECD, I know that is very intensely the work that even policymakers and analysts and advisors are actually thinking from that governmental level. But at some point, the tools are not necessarily there. There is a dependence on a third independent party. And it might not come from government. It's certainly not coming from, the private interests of the industry. But there is a middle layer where, interestingly, Chainalysis is filling that void and being that bridge, as it were. Your official title at Chainalysis is what? And what will you be doing? Your goal is what?
Sure. So I am the head of international policy at Chainalysis, which is, I'll be working with a counterpart who's leading on the US domestic policy, and I'll be leading on rest of the world policy, which really a huge amount of opportunity there, because we are seeing so much action now, not just in the US, but policymakers starting to move, whether it be in the UK and obviously in Europe. We can dig into some of those details as well, but right through to Asia and even Australia, where we're seeing a lot more action now, a lot more interest in this space. For me, look, in some ways, there's a sort of a strong continuity with the role I was taking at the OECD. And by that, I mean, a lot of the work that we want to do here is around education, because we are in this very unique position in terms of the data and the analytics that we have access to. First and foremost, it's about making sure regulators understand what this sector is really about, not just at the surface level, but really digging into the detail. And you can see that come through. We do a huge amount of research that we publish for the industry, but it's also picked up by policymakers themselves in terms of trying to understand, whether it be around sort of geographies, where are we seeing the most adoption in different aspects of the industry, different sectors, NFTs, DeFi, for example, or whether it be about, some of the work that you're seeing coming out right at the moment in terms of our look at crime in this sector, and what are the different approaches that we're seeing to criminal activity? How does it fit, though, into the bigger picture of digital assets? And I think one thing that's really interesting, and this has really just come out, something we've published in the last week, is around the fact that, yes, we are seeing an increase on crime year on year from 2020, but nowhere near the level of increase we're seeing in activity in digital asset sector more generally.
And that absolutely is one of the critical things that is facing the industry. We're going to dive into that a little bit more after this break.
Still to come, crypto scams on the rise, but do the numbers tell the entire story?
Yes, we are seeing an increase on crime year on year from 2020, but nowhere near the level of increase we're seeing in activity in digital asset sector more generally.
And later, can regulators play catch up when word on the block returns?
Forecast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. We go to where the action is, from Asia to the world. Forecast is the most reliable source of intellectual discourse and insight that informs, educates, and bridges the gap between the blockchain industry and the mainstream. The future is being built, and Forecast has it covered. This is Forecast News.
Welcome back. Are crypto scams on the rise? We pick up our conversation with Caroline Malcolm, Head of International Policy at Chainalysis. It's a brand new role for you, Caroline. We talked about you kind of being part of this global trend that we are seeing with policymakers and professionals in the legacy traditional space and kind of migrating into the industry. I think this integration is extraordinarily healthy because it means that everybody's starting to speak the same language. And it's a concerted front that's increasingly more important when it comes to crime on the blockchain, in crypto. It's a serious issue that a lot of people recognize is undermining growth and triggering policy response that isn't always nuanced. I mean, that's, I think, what we've seen repeatedly. Crime is such a huge issue for the industry. What's the role that Chainalysis is playing, that industry leaders must play alongside with policymakers here?
So, look, Angie, crime is definitely an issue that the industry is looking to tackle, but I think it's really important too that we put it into perspective. So, yes, cryptocurrency-based crime hit a new all-time high in 2021, and we saw illicit addresses receiving just over $14 billion over the course of the year, and that's up from $7.8 billion in 2020. So there's no question we do see crime increasing in this space. Within that picture, though, we really need to keep in mind that cryptocurrency usage as a whole grew faster than ever before. And across all cryptocurrencies tracked by Chainalysis, total transaction volume grew to 15.8 trillion in 2021, which is over 500% increase in what we saw on the year before. And so I guess given that sort of roaring adoption, it's really no surprise that more cyber criminals are using cryptocurrency. But the reality is that as a total proportion of activity in digital assets, crime is actually reducing.
And why is it reducing? Why is it diminishing? Is it as a ratio of the growth, or is it because of proactive procedures, new insights from the industry as a whole?
Yeah, look, I think there's a variety of reasons why we see, criminal activity increasing in total numbers, but reducing as a percentage of activity in this space. One is that we're seeing different types of criminal activity take place. So, for example, if we just look at what we think of as scamming activity, scamming revenue rose by 82% in 2021 to 7.7 billion. So that's nearly half of the total of illicit activity that we saw in this space. And over 2.8 billion of that came from rug pulls. Now, that's something which has really been a new part of sort of criminal activity that we haven't seen take such a big place up until the last 12 months or so. Now, rug pulls, they are a relatively new scam. They're particularly common in the DeFi ecosystem, and that's where we hear about them a lot. The reality is, though, that about 90% of the total value of what was lost to rug pulls in 2021 can be attributed to one fraudulent centralized exchange. So we hear that a lot in DeFi, and obviously we hear a lot about the boom in DeFi generally, but when you really start to look at the numbers, we realize that, in fact, it might be other parts of the sector where, the greatest issue might arise.
I think a big part of your role as well is intellectual empathy. You get where lawmakers and policymakers are frustrated, recognize some of the obstacles and challenges, just this avalanche of issues that, not a lot of things in the toolkit can address. And part of the huge issue of DeFi is the lack of human intervention. It makes DeFi platforms a target for cyber criminals. It also means that if there is some sort of regulatory response, who do I talk to? The whole point of decentralized finance is that it's decentralized. How do you envision that this is going to play out? We do, and we are hearing more and more interest and concern from policymakers from around the world to look more closely into DeFi. The question is, where does everybody start? Who's going to start, and how is it going to start?
Yeah,
your view?
it's a great question, Angie. And look, DeFi is definitely one area that we've highlighted is where we're likely to see more regulatory action in the year ahead for 2022. What's interesting is that some of those discussions around DeFi have already begun, and we've seen them, for example, start, whether it be in the new AML guidance that the FATF came out with last year around virtual assets, where we saw an extension of the rules into those kind of borders of the DeFi space, and also a very clear message to regulators in that guidance that, looking to take a stricter approach to DeFi applications and ensuring compliance in the DeFi space was something that needed to be done in terms of monitoring of the implementation of those rules going forward. So we saw really a discussion start there. We saw a lot of contributions on these issues, for example, in the public consultation process that led into that guidance.
It's one of the biggest themes for 2022, and I know we both agree on that, the regulatory component and the themes. I do believe it's going to come to a head this year. Increasingly, as the industry grows, so too do regulatory power is becoming more aggressive in its approach. And when we come back, Caroline, I want to ask you how you see things playing out. I want you to peek into your regulatory crystal ball. And I'm also going to ask you about the creme of the creme right now that the industry and the retail sector loves, stablecoins, but regulators, that's another story when we come back.
Will stablecoins remain stable in 2022 as regulatory scrutiny mounts? More when we come back.
Forecast News is your gateway to all things blockchain, breaking down and breaking through the noise with the people who know it best and why it matters. The future is being built, and Forecast has it covered. This is Forecast News.
All right, stablecoins have been on regulators' radars since last year as Congress was urged in the U.S. to subject stablecoin issuers to the same legal obligations as banks. And increasingly around the world, those conversations, no doubt, are being had at boardroom tables and governmental agency tables around the world. What level of regulatory scrutiny can stablecoin issuers expect in 2022? Caroline Malcolm, stablecoins, it's a hot topic.
You're absolutely right. There is a trend, at least at the discussion level, to move towards bank or bank-like regulations for stablecoins. Now, I will say that is not perhaps a perception that is not a statement that you can make that's true globally. Certainly in the US, we've seen a lot of talk in that direction, particularly with the working part. Particularly with the
President's Working Group.
The President's Working Group paper that we saw come out at the end of 2021. In Europe, though, we're seeing a slightly different approach, but again, nothing defined as yet, but certainly some proposals, including under MiCA, in terms of how to best handle stablecoins. And certainly around the world, I think the other factor feeding into the stablecoin discussion is in terms of central bank digital currencies and where different countries have progressed in terms of whether they themselves envision issuing a digital version of their own currencies, with some seeing stablecoins being able to coexist with that, and others seeing those as being, exclusive options, that there needs to be one or the other. And I think those discussions will proceed in parallel.
Once upon a time, I think even, it feels like dog years in our industry, but literally this was maybe a conversation 2 to 3 years ago, if that, maybe 2 years ago, where it was very clear China was on a path. People were just starting to wake up, start to pay attention. And then there was also an excitement that if there was a central bank-backed digital currency, then seemingly it was perceived as governments are starting to see the benefits of a digital currency, and isn't that great for the entire industry? And now there is, to your point, in some cases, stablecoins actually are seen as direct conflict and a direct challenge from the private sector to what governments are trying to do in the digital space. Take a look at Thailand for this example. Stablecoins that are tied to the Thai baht are banned in Thailand, whereas the CBDC efforts in Thailand are very, very specific. We're increasingly seeing that in other countries. Mexico having expressed CBDC interests, and then also banning crypto and the like. So now we've evolved to this space. If you were speaking to those policymakers, what are the pros and cons to stablecoins that they might not be aware of that they should consider?
Yeah, look, I think this idea that these two can't coexist is something we've already seen, in fact, in kind of monetary policy and the way that the money already operates in our world today. We already have a system of public money and private money, in fact, and they serve very different roles. And what we've really found is that through private money, which is the money that most of us are transacting with on a day-to-day basis, it allows us a functionality and a usage which simply hasn't been the role of central banks historically. And making that shift, particularly if you are looking at some of the models of central bank digital currencies, which are sort of more retail facing, that's a very significant shift in terms of what the role of a central bank might be in our sort of financial system. And so I think that's certainly one of the issues that central banks are having to grapple with in terms of the architecture and design of their central banks and how it fits into the monetary and financial system as a whole. But I think, there is this opportunity for stablecoins to offer functionalities and to evolve in a way that maybe central banks aren't well placed to provide, in terms of offering products or features to the market, which would require sort of a level of technology management and upkeep that has never been the role of central banks historically. And I think those are some of the factors that we need to think about, but also that some of these things that, we're thinking about today, we can draw on lessons, we can draw from existing systems. As I said, we already exist in a world which does operate with both private and public money. Those coexist very happily. They serve very different functions. And so really thinking about, that with an open mind in terms of how these two things might coexist, I think is probably quite important. And ultimately, what are going to be the benefits to consumers, to citizens, to businesses in terms of having that optionality that variety of choice offers?
It's coexisting, but not a lot of people agree. Look into your regulatory crystal ball. You're going to be a busy head of international policy person at Chainalysis, a very busy woman indeed. What are your top predictions from the regulatory front? What do you see coming that you think that the industry should brace for so that we can anticipate what's to come?
Yeah, look, Angie, we've dug into sort of DeFi and stable coins. AML implementation is the next one. And I think everyone gets very focused on actually the development of the rules itself. But I think it's really implementation when the rubber hits the road. FATF has outlined the high level of objectives that countries need to get to, but implementation is we're really going to see the detail of how they translate that objective into local rules. And I think from an industry perspective, as well as from a government perspective, making sure that process of implementation is as coherent as possible across jurisdictions. Now, I recognise there will always be some local specificities that will likely need to be incorporated, but an underlying coherency in those rules as they're actually implemented into jurisdictions, I think will be really, really critical in terms of, from an industry perspective, in terms of ensuring efficiency and allowing the flexibility and transparency of transactions on blockchains to continue in the way that they have to date. But also from a government perspective, in terms of being able to, both promote innovation in this space, but also, sharing information between different jurisdictions on how, these different rules operate, their effectiveness of the rules, but also how the data is actually exchanged. Making sure those systems can actually talk coherently with one another will be just as important for governments as it will be for industry. So I would say watch AML implementation. We're already seeing a couple of jurisdictions, including there in Asia, South Korea, moving ahead very quickly on implementation of the new FATF rules. And we'll see that only spread in 2022. The other one, which I think has been a little bit of a sleeping giant, is tax, in fact. So far, a lot of, when we talk about tax and crypto, we often are talking about tax treatment. So how do I actually, how do I treat this gain or this loss that I've made in this space? Is it income? Is it capital? So on and so forth. What about mining? How about staking? How does that fit in from a tax record perspective? But I think what's coming even more, and we saw the sort of very early stages of this in the US infrastructure investment bill and ultimately act at the end of the year, was this idea about information reporting in the tax space. This is something which I think the industry probably hasn't paid a huge amount of attention to date. It does pick up a lot of the themes that we have seen and discussed in the AML discussions in terms of, who has responsibility, what information needs to be collected, how do you exchange it. So in very much the same way that we have, for example, in traditional finance, rules like FATCA or rules set by the OECD in terms of international information exchange about financial accounts, about taxpayers who are living in different countries and have accounts overseas. We have that in the traditional finance world. I think that's what we can see coming in the year ahead for 2022.
We have quickly talked about layer one, when the industry started, then layer two for, how it sits on top of blockchain platforms and create efficiencies and utilities and fundamentals. And I think let's just coin the phrase right now. The layer three is that regulatory just layer where we can move with ease and across jurisdictions, truly multi-jurisdictional, multi-chain,
compliance
layer one. 1, 2, 3.
Absolutely.
Caroline, it is a pleasure for the 1, 2, 3s and the ABCs of where we are headed in the regulatory space in 2022. Always a pleasure, and thanks for joining us on Word on the Block.
It's a real pleasure to be with you, Angie, and your listeners. I hope to join you again soon.
Absolutely. And thank you, everyone, for joining us on this latest episode of Word on the Block. I'm Editor-in-Chief Angie Lau. Until the next time.